Good morning. Looks like Elon's at it again last week. I'm sure everybody's keeping track. If you've got your scan, you should have already had all this information um, put in. Uh, you ought to have all your trades already set up, depending on the strategy that you're using. Uh, if you're new, follow along. Uh, this isn't rocket science. This is not, get rich quick. Stay on track, stay focused, and just relax. This is not, you're not going to miss anything. If you miss a trade, who cares? This is a numbers game. We're starting with really small accounts here, okay? Because if you can't trade a small account, you sure as heck can't trade a large one. All we're doing is looking to see, what might be moving, if anything is maybe over our limit, which nothing's actually going on this morning. Work during the day and are not able to watch the opening and the close. There are strategies out there for you. This is not something you have to sit in front of your computer. I don't have to be here. This is just, you want to call it kind of semi-automated. I do not believe in doing fully automated or having algorithms take care of everything. There's just too many variables. You can try to cover everything. There's a lot of AI out there that's controlling a lot of tradings at different institutions. What you're going to run into is, well, we're going to fix it to open here. When an algorithm takes over, it can start running in one direction and then start selling. So, if you're one of these day traders that thinks you can outsmart the algorithms, then have at it. But I would rather continue to make money every day and not worry about, missing out or taking huge losses and then trying to recoup from that. So we should be open here shortly. Looks like we're pretty much red. You see me flipping around a lot. All I'm doing is seeing which ones are actually moving. We follow the alerts. Some alerts are just old alerts. I don't go back in and take them off. That's moving in my favor or something that's moving against me. We'll get a spin off here. Interesting. Now I'm using a pullback strategy here, and you can learn more about that. But first thing we want to figure out is what our max shares are. And remember, anything under 100,000, you're only going to be doing 10% of max shares. So, hopefully it's a fairly slow morning, so I can explain some of this stuff to you, those that you haven't taken the course. It gets a little bit more in depth, but it's very simple. It's just you've got to get your head around the brainwashing that you've been going through if you're fairly new to this. If you've been around a while, you pretty much understand what's going on. heck did that go? Okay, I know I'm missing something here. Oh, there it is. Somehow or another, I got it on the bottom. PCH.
Porterfield.
PCH, where'd it go? There it is. Get that off of here. We want to be consistent. This is the biggest thing, is sticking to your rules. That's what makes you consistent. I think 17 now, 17 different accounts. But these smaller ones they're a lot easier because there's just not as much action. You don't have to be watching this. This is what I'm trying to tell folks, that you keep on falling in the trap of quick money. It's gambling. Stop gambling. You get an addiction, get some help. Alright, so what was that we sold? PFE. What the heck? This thing's all messed up here. There we go. PFE. So we check their scan. It's actually on the scan for this week. It's a fairly small scan. We only have 20 on this week, but we can reset it. We took our profit. And all right, now that that's all taken care of, now we start looking around. Got some positives. Let's take a look at Twitter, see how bad it's getting hammered. Yeah, so much manipulation in all of these And you can see down at the bottom here, there's no dividends. We're not interested. Maybe. I mean, you're guessing. It's a 50-50. If it goes against you, what if Musk just sold all of his shit? Everybody's sitting there, waiting to see what somebody else is doing. It's not the way to invest. Get paid. Having your money in the market is better than trying to time the market. You're always going to be late listening to people, listening to news. You will always lose. You get lucky, but that's really all it is. If that's your strategy, is to go off sentiment, longer term, you can get away with it. But if you're looking to make, day trade, just know that 95% of the people that day trade lose money. That's a fact. That's not me. That's a fact. You just go to CBOE. Ask them about the options. Who's winning in the options? Yeah, there's people making money in options. I can make money in options. But you have to understand what the options and what the options are and how you're going to use them. There's people making monies in futures. But that information around, help out the people that are struggling out there. But chances are somebody got on a run, they get 10 wins in a row, and now they think they know everything about the market, and you never hear from them again. So we're looking at what, 671 days without a loss with this system. Now you got to understand, I've got about, is it 30 or 35 people using this system. Nobody's taken a loss. We've pulled a lot of money out of the market in the last 671 days. At least nobody's emailed me and said they've taken a loss. Of course, when you get these slow days, waiting for the market to do something, and what that is, you're waiting on institutions. You're waiting for market makers to make something happen. It's all out of your control. So you have to use a strategy that allows you to benefit from the movements in the market. If it's a 50-50 chance, the more stocks that you have that are what are you doing? You're buying. When it's all green, you're selling. It's that simple. And we look here, that's why I'm constantly updating this to see, give us an idea of what direction it's going. I make no trades unless the scan tells me or I've hit a level which I need to look at. That's why I use the alerts. So using a pullback strategy, we're using the limit column on your scan, and based on each weekly scan, we pull back to that number, we use a trail. If we had different market conditions, we can use that limit to buy on. Now more aggressive people that are just starting out, that need to get a little bit of money into the market, Maybe they use the Friday close to start to get in. The whole idea is to be in the market and to be pulling in the dividends. The dividends are just part of it. If you look at the well, I know that thing's switching around all the time. But if you look at what you're making on a week-to-week basis, people say, well, what if the market crashes? It's like, well, yeah. I mean, they've been saying that for how many years? I mean, what is it now? 2022? 2008 was the last crash, so we got 14 years. Well, it's going to crash any day now. I'm sure it will. Do I care? No. You're going to continue to keep pulling those dividends out of the market. What's the worst case scenario? Do I pull down dividends? Well, they'll stop paying you dividends. I was like, okay. So now I'm in the same boat that you were, because you were, what, buying growth stocks. The only difference is you ain't making anything. And if they stop paying me dividends, you think every company is going to stop paying dividends? No. And it's just a small percentage across the board because my risk is spread out. So it looks like we've got AVY, possible winner. The reason why you see it paint that, it's because of the spread. If we go over and we look at AVY, we can look and see what the spread is. That limit is because there's a big enough spread in there where nobody could hit the ask. So we just keep updating this just to see, because things change quickly. You know, the overall market's down, but yet I'm sure we've only got one win today. What's the overall market doing? It's not too bad. We never promote any one stock over another. This is just strictly a money management system using stocks that pay dividends. So you don't just focus on one stock. That's fine. You know, if you're Warren Buffett and you got that kind of money, his whole thing is, and he's right, you know, don't take losses. But the other thing that he can't do is he can't get in and out of the market as fast as we can with smaller accounts. You know, he's dealing in, you know, hundreds of thousands, millions of shares, you know, so it's easier for him just to collect dividends. If you've got Coke and you're pulling down $150 million a quarter, why do you want to mess around? And, you know, why would you bother? You know, you're only making what, 3.5%, maybe less than that. Who knows? I don't know what his cost basis is, so it might be higher than that. Maybe his, you know, average price is 25, which would be like 7%, because, you know, stock price is quite a bit higher now. So people just don't understand the percentage and the percentage yields, the dividend amounts. Once you start getting up into the larger size accounts, but the thing is, you need to walk before you can run. So, and that's the draw. You know, you read about this, or you hear some guru online that's telling you about, you know, how much money he makes. There's a lot of day traders out there. I'm sure they make a ton of money, you know, but I've just never known one personally. I've read a lot of books over the years. I've been doing this for over 30 years, and I'm constantly amazed at how many rocket scientists are out there that, you know, they're making so much money with their system, and I'm kind of like, yeah, it's not making a lot of sense. Use some common sense. But either way, I mean, I don't listen to anybody anyways. I mean, I think for myself. Somebody with more money than you. So you forget that idea. Stop losing money. Stop being the fodder. If 95% of the people are losing, which one are you? You know, are you going to keep giving money to the cause? I mean, that's why people think the stock market's the casino. But I laugh. Musk, man, he's brutal. He knows exactly what he's doing. And, you know, I don't know what he's doing, but I know he knows what he's doing. So he's not a loser. Look what he did with Dogecoin, man. He took everybody for a ride on that. Everybody piled in there and shot that thing through the moon. And what did he do? Hung you all out to dry. A lot of people, you know, a lot of people still believe he's, you know, legit. And I was like, well, maybe he is, maybe he isn't. I don't know, but I'm not going to take advice from somebody else. Like, hey, just because he's pumping it, you'll never hear out of my mouth what to buy. I give you a list, and you can figure out, if you understand the rules, what you want to put in your portfolio. Hey, if you want to go after the dividend amount, hey, have it. The whole time, or you'd spend your whole day on Sunday trying to, uh, you know, input information and then trying to trade off of that. And a lot of times, I mean, you want to make it worth your while, but when you're dealing with larger sums of money, you want to make it where it's easy on you, especially if you're working. I know it's hard for people to understand this, and most people that are watching this probably are working. You know, if you're watching this in your spare time. Uh, Let me just get this off of here. I just reset everything. So we just sold AVY, and AVY is on the scan. So we're going to reset everything. Okay, and so where are we at? So 173.08. A pretty popular one. We've seen this over the years come up and stick around quite a bit. When people ask, well, you know, why aren't you waiting for it to go up there to 222.50? I was like, I don't have a crystal ball. I want the money now. I want to be. This whole thing is based on occurrences. We just took money. Just got paid our 1.5% for the 272, or what do we have here? Yeah, 277. So what was the other one? 277. So we just pulled that out of the market for our small investment, right? So it was last week. If you still see a blue on the screen, that means we bought it last week and we just sold it this week. You can see the difference. You gotta probably look at the date on it. Yeah, April 6th. So 5 days to make, what was it, 277. But what did we do? We made a 1.5%. Now here's the deal. That doesn't sound like a lot of money. You're working with a small amount of money. Okay, this is a $70,000 account. You have a max shares of 10 because of the price. Okay, the risk. You don't want to be overextending yourself, over leveraging yourself in any one product. If you do that, hey, well, why don't you you could have just bought $70,000 worth of AVY. Yeah, I could have, but it could have went straight down too. And then I'd be looking at 1.5% until that sucker came back up, right? But what did I just do? In 5 days, I got paid for the entire year. If you understand that, you get the gist of what I'm doing. I am. That's, hey, have at it. You want to do your own? You want some information on your own? If you want to know what the max shares are, just shoot me a line. I can tell you what the max shares that I would, depending on the size of your account. Okay, it's not just some random number that I come up with. We have algorithms for everything. It's to protect you. So when this market does finally crash, we've already made our money over what? If you looked at the average in 6 years, if you make 12% in 6 years, you've doubled your money. So everything that you have in your account is paid for. That's how you have to look at it. So here we have another one, AIZ. Now, do I know that it's going to hit that? I have no clue. You just sit there and look at it, and what some people will do, if you had 100 shares in here, I've seen this time and time again when I worked with a couple people that were day traders. They say, hey, this is my target price. And 5 seconds later, they sell it because they're nervous. I'm like, well, what did you make? Now it goes up to their price and it's out. But see, everybody's looking at with 500 shares, you got some money riding on that, right? Are you more likely to sell it early because you're like, you're going to be feeling the pressure? I don't have any pressure. I just take money from the market. Doesn't matter. On these small accounts, yeah, it doesn't seem like much, but I'm still pulling down 1%. I multiply that by whatever amount that you've got. If you've got 500,000, if you're taking 12% out of the market, that's 60 grand a year. Okay? It's just simple math. Don't make it, this is not rocket science. When it comes down, hey, let's see what this account is earning. So this account is 6.69%, right? What the most markets, after they crash, how long do they stay down? About 70 weeks. So you got 70 weeks to earn over a year. So you're going to earn 6%, 6.9% for what? A year and a half. Big deal. That's not saying that you couldn't be selling or buying more, but you still got that money coming in. This is how, if you don't take losses, this is how you grow your accounts. Stop trying to figure out how to get rich quick and just let it come to you. You know, but you have to do it in a methodical way and get yourself diversified. I don't care what you're into, diversify. But stop listening to these gurus on Twitter. I love shooting people down that are just putting out bogus information. You know, somebody like Musk, I don't know him. You know, I don't know what his intentions are, but everybody that likes Musk or has a vested interest in what he's doing, man, they are promoting him all the time. It's just, I always take pause when I hear people talking because it's like, yeah, what's your angle? But light morning in the market for a Monday, it's pretty light. But there's usually more in the day. We'll go a few minutes past since it's my first time back talking on here. Usually around the 9 o'clock hour, top of the hour, you know, you start getting a little bit of movement from the institutional investors after they've, you know, played around with their slide rules and done their deal. See on these charts, it's all they are is lines. It's information from the past. You just you're I hate using the word predicting because I'm not predicting anything. All I'm doing is saying, hey, this is how much money I want to be making off of this particular product in this particular environment with this kind of money in this portfolio. You break it down into its small little bit. If you got $1,000, split it up. You know, you say, hey, I look at my scan. It's like, what can I afford? It's like, okay, well, if I had $1,000, I know right now I could buy at least 8 off the scan. I put them in there, but say, okay, and what's it going to earn me? Well, now if you're trading it, and if you're at 1,000, if you're under 25,000, remember day trading rules. Okay, so you want to be in and out super quick. So you take those ones. It's really best, in my opinion, to focus on the highest percentage yield per year. They don't move as much, but you're going to get that money at the end of the year. So CEFs are your best bet because they don't move much, so there's less volatility, and they pay a higher percentage. Maybe not a higher dividend, but a higher percentage. But you'll something's afoot. But you notice I don't have a news feed going. Doesn't matter. Whatever they tell me, it doesn't matter. Look, by the time you get the information from any news source, the pros have already made their moves. If you don't believe that there's insider information or that somebody is ahead of the game, you're fooling yourself. And trying to play tick by tick, you're just going to stress yourself out. You're going to get old quick, and you're going to make one mistake one day because you're going to get greedy. You get fatigued. You're going to be sitting behind that monitor saying, yeah, well, I know it's going to do it this time. And you jump in with both feet, and next thing you know, they see that bigger order and they go after it, and they see your stop because you got a close stop, and next thing you know, you're stopped at, and just put up a number, how much you want to lose. Happens in casinos all the time. That's how you get the word terminology for casino, is because people love to bet. Stop betting and start investing. The biggest difference between what I do and so I think last year we did what, 15 and a half. I think one of our people that subscribed to it, I think they hit 22%. And I was kind of interested to look at it. I ain't got time to, whatever, 15%, 12%, 6 years, 15%. That's like 4.8 years to double your money. Now you can't realistically think that you're going to make 20% per year in the market. People that are doing that, you know, they've got some skill, and they're probably full time. Um, Probably work at some hedge fund somewhere. Yeah, I'm not seeing anything jumping out. Looks like we just got a lot of times too. You get a lot of reinvestment of dividends, so you see a lot of positive action when stuff is reinvested, which is fine. But yeah, you can see how some of those greens went red. Yeah, we just keep doing the same thing every day. Nothing exciting, but it works. It's got teeth. It continues to work, right? So, and eventually the market's going to back up. Eventually we'll take a loss. Okay, I have no doubt, but it's not going to be my whole account gets shut down, or multiple accounts get shut down because I was stupid and decided, hey, I'm going to put all my money into Twitter, or I'm going to put all my money into one stock, and because it pays me 3% in dividends. Like, I don't go put all my money into Coke and then think I'm going to get rich. It just doesn't work like that. You got to do a little bit of work, but this is so easy. You can do this on a Sunday. Okay, this is a super easy scan this week. Probably took less than 10 minutes. I think we had a total of, let's see, 1, 2, 3, 4, 5. Let's see, 5 just in these 3 portfolios that actually you come home at night. Um, if if you've got a phone, you can use your phone at work. All you have to do is set up your alerts, depending on who your brokerage is through. Gives you an alert. Take your scan with you and say, oh, this is my target price, and you put your closing order in, go back to work. I think people check their phones every day, but they check them for the wrong friggin' reasons. Hey, what's Elon Musk doing? Doesn't matter. If he's doing it, it's too late. Just like when he bought, had you been the lucky guy that bought it the day before he bought it, then you could have sold for a good $10 profit. That was a huge gap. But everybody's thinking, oh, it's going to the moon. Hoodle. All these catchphrases for everybody out there that is new. Yeah, don't fall for it. They're taking you for a ride. But anyways, I got things to do. I went a little over there just to see if we are going to get any fast action there. Maybe close out a couple more. Maybe pick up a couple more. But yeah, it looks like it's going to be kind of flat. Anyways, that's it for this morning. We'll talk to you later.